Could you imagine if you went to the store to buy something and the price that you had to pay for that thing would be different depending on your demographics? Maybe a loaf of bread if you're 25 years old is $3, and if you're 35 years old, it's $4. Well, that's how car insurance works today. Two people could purchase the exact same product, and depending on their age, their gender, their credit score, they have to pay a different price for it, even if they're both insuring a 2015 Ford Focus. Of course, the insurance industry has a good reason for this. The reason that people have to pay a different price based on their demographics is because they have a different likelihood of getting into an accident. 16-year-olds get into car accidents more often than 26-year-olds. They're younger, less experienced drivers. So, of course, it stands to reason that they should have to pay more for insurance. But is that really fair? What about two people with the same demographics? Should every 25-year-old female with a credit score of 600 pay the exact same price? Of course not. Like two people with the same demographics could drive very differently from each other. One person might be safe, responsible. Maybe they don't even drive very much. Somebody else might be aggressive, reckless, and drive a ton. But unfortunately, with the way insurance has worked, it's always been priced that way. And we started Root to change this. We started Root to build a company that prices insurance primarily based on actual driving behavior. And after gathering over 1 trillion data points from mobile phones over the last 4 years, we've done that. Insurance is no longer only about these things. It's priced based on how people are actually driving. Insurance companies have known for a long time that this was the case, that insurance should be priced more based on how people drive, but they've really failed to build the technology. Most of the technology has been built with OBD devices. OBD stands for onboard diagnostics, and insurance companies would make these little boxes that they would send to consumers and have them plug into their vehicle. For a lot of people, probably for a lot of people in this room, you'd be fine with that. You'd be fine finding the port in your car where you have to plug the box in. But those devices are expensive to manufacture. A lot of people are uncertain of how to actually use them and install them in their vehicles, and the user experience is exceptionally poor. I think the interesting thing about this is Root pricing insurance based on driving behavior using a mobile phone isn't actually that innovative of an idea. Insurance companies have known for a long time that the driving behavior is more predictive. They've just actually failed to execute on building the technology. And really what happened that allowed Root to get started is this. Every single one of you have one of these with you right now, I'm certain. And these phones have an amazing number of sensors on it. When we started the company in 2015, mobile phones had finally gotten to the point where they were powerful enough to be able to get the kind of analysis we needed around driving behavior directly from the device. And battery life was good enough to run GPS continuously. Network connectivity was good enough to transmit all of the data. And what Root does is we leverage these sensors on the phone to capture 10 data points per second as somebody is driving their vehicle. Everybody here knows what a GPS does, but it gives us insight into where somebody is, where they're headed, like their speed, and we're able to read from that sensor once per second the entire time somebody is driving. The accelerometer is the next sensor that we rely on the most. And interestingly, the iPhone 5S, which hadn't been out that long when we started the company in 2015, was the first phone to include a motion coprocessor chip, which is what allowed us to really capture this data in a high fidelity way, where we could get these really rich insights into driving behavior. The accelerometer in your phone feels the same force that you do when you're driving in a car. You know, if you're in a car and somebody slams on their brakes, the momentum kind of carries you forward, your phone feels that force. Similarly, if somebody floors it and you go back in your seat, your phone feels that force as well. And we're able to analyze that data coming from the accelerometer. The gyroscope and magnetometer are a little bit less interesting, but they give us indicators about how the phone's oriented and also like the rotational velocity around the phone. And if you've ever played a game on your phone where just a little bit of movement from the phone allows you to control the game, you probably have some insight into how rich the data is coming from the phone. You know, if a little movement of the phone is enough to control a video game, it's certainly enough for us to get a lot of insight into what's happening in a vehicle as somebody is driving a car. We're able to do this entirely in the background. It's not like every time somebody goes to drive, they have to push a button. Somebody downloads Root, they install the app, they basically forget about it for a couple weeks. We do analysis as people are driving, and then at the end of that process, we produce a quote for insurance that's primarily based on driving behavior. To give you some examples of the things that we're able to predict, one is hard braking, and this is one of the most predictive things in auto insurance risk. Most people don't hit their brakes any harder than they need to stop in the distance that they need to stop. Nobody slams on their brakes and then like rolls up to the stop sign slowly. People generally try to stop in the distance they need to. So when we see a hard braking event, a lot of times it could indicate a narrow miss on a car insurance accident. Maybe somebody was driving down the highway. I'm sure many of you have done this and weren't quite paying attention. All of a sudden looked up and traffic was coming to a stop and you had to brake harder than you would have had to otherwise. Of course, every circumstance of that isn't bad. Maybe somebody's driving through a residential neighborhood and a kid runs out in the street. In those scenarios, we want people to hit their brakes hard. But kind of all else being equal, if you have one driver where we see 20 hard braking events in a month and another where we see 100, that driver with 100 is a lot more likely to eventually get into an accident. When we first started the company, we actually thought that this mobile sensor data wouldn't be as good as the data coming from the vehicles directly via those devices I talked about. Mobile data is a lot noisier. I mentioned the phone feels a force when you're braking and accelerating, and it does, but it also feels a force when you just drop your phone on the floor. And I'm sure you've had experiences where maybe your GPS sensor kind of lags behind, especially in cities or congested areas. We have the same problem when we're analyzing this data for driving behavior. But we actually realized that mobile is a tremendous advantage for us, especially now, because our second most predictive risk factor is distracted driving. People are increasingly spending a lot of time on their phones while they're driving in a vehicle. And that's something that you can't tell when you're getting data directly from the car at all. We can really only determine that by building a distracted driving model that looks at how much somebody's phone is moving while they're driving. The end result of leveraging these sensors is that we have built one of the fastest growing venture-backed companies in history. We just recently raised $350 million at a $3.65 billion valuation, which brings the total capital we've raised to over $500 million. And I think the thing that we're most proud of is not just these business results, but this is a reflection of how excited consumers are to have a new option for car insurance. We're a top 50 finance app in both iOS and Android with a 4.7 star rating in iOS with over 30,000 reviews. And this is a 4.7 star rating for an insurance app. This isn't Candy Crush or Fortnite or whatever people like, Snapchat maybe. This is for an insurance app. And to really highlight our growth, we wrote $4 million in written premium in 2017. That's kind of like the total value of all of our insurance contracts. In 2019, we'll write over $400 million. I think one of the exciting opportunities that we have too is to not just price insurance based on driving behavior, but really try to understand that risk. And when you think about it, we talk a lot about assessing risk and determining risk, but what we're actually doing is calculating the likelihood that somebody gets into a car accident. And sadly, a lot of people get seriously injured in car accidents. So we really think over time we'll be able to leverage these insights. It's difficult to change people's behavior, but we hope we'll be able to encourage people to be safer on the road and maybe even eventually save some lives. Although we focus on the data science aspect of what we do a lot, Root's core expertise is really not just in data science, but it's in leveraging trends in data and in technology to assess risk more accurately and fairly than has ever been able to be possible, and also build better products and user experiences on top of it. Right now, we apply that core expertise to auto insurance, but we think there'll be other lines of insurance that we could apply that expertise to. And the product aspect is also a really important part of what we're doing. We really think that there isn't like a one-size-fits-all insurance experience. And I think there's this big trend right now towards personalization and companies being able to adapt their services to better meet a consumer's needs. I think this one is really interesting because when you think about it, insurance used to be sold through insurance agents. And when somebody would walk into an insurance agent's office, that insurance agent wouldn't treat every single person exactly the same. I'm sure they wouldn't talk to that person about the same things, if it was maybe like a 90-year-old lady or a 16-year-old first-time driver or a 35-year-old parent with maybe some teenagers that are going to be driving soon. But then when we made this transition away from insurance agents into building digital experiences, for whatever reason, we just kind of created one experience and we said, okay, this is the user flow for everybody. And at Root, we're a highly quantitative company in how we build our product. We do a lot of experimentation and A/B testing, which means that as we're iterating on the product, we typically will take a change and roll it out to half of our users so that we can see which product experience performs better, which one helps us sell more insurance. And a lot of times, we declare one side of that A/B test a winner. However, it's not always the case that one experience is just universally better than the other. A lot of times we'll look at those tests and say, did a certain portion of our customer base perform better with this experience compared to this other one? And we're starting to reach a point where we've had enough users coming through the app that we can really start to segment that experience and figure out how to best serve each customer's respective needs. So when we started out, it was really just our core product. We're looking for drivers that drive kind of safer than the typical driver and want a rate for insurance that reflects that. But now, increasingly, cars are connected, and we can get data directly from cars. So we now have a product called Skip Drive, where if your car already is producing data on how you drive, we'll leverage that data. And when you download Root, we pull the data from your car, we analyze it immediately, and you get your quote right away. Although some people don't have that car that already has the data, but still need insurance right away, and we now have a flow for them. It's our day zero flow, where we allow people to purchase a policy right away, then go through the driving process, and we give them a new quote 30 days in that is priced based on their actual driving behavior. One of the really awesome things about this is that we save a lot of people money. And the reason that we are going to write over $400 million in premium this year is because insurance is a fairly commoditized product. People purchase insurance typically based on price. And we're able to save a lot of people money because a lot of people are safer than the typical driver. But we don't save people money the same way that Walmart does. We're not just a budget insurance carrier. We're actually just charging people a rate that is more fair and reflective of their actual risk. And for a lot of people, car insurance is a major expenditure. I think in most households, it's a top 5 expense. And that's really what's generated so much enthusiasm for what we've been doing. Ultimately, I think everybody is well aware of the potential that data has to produce better products and services and improve people's lives. But I think it's largely been unharnessed in a lot of injuries, and insurance has been one of those. When you look at some of the most valuable companies in the world today, like Google and Facebook, they're the companies that have leveraged data the best. But there's kind of this sad line in engineering circles that some of the greatest engineers and the greatest minds of our time are dedicating their lives towards getting people to click on more ads, because Google and Facebook are effectively advertising companies. And Root certainly has the potential to leverage this data, I think, in a way that's more beneficial to consumers, to get people a rate for insurance that is actually more fair based on their actual risk. And I think we're just scratching the surface of what we'll be able to do. In the future, I think there's a potential that it's not just a rate for 6 months, but we can determine your risk on like a more fine-grained basis. And over time, I expect that we'll really be able to change this industry. Thank you.